Oh, hello. Welcome to my bar review show. Today we're talking about secured transactions. Secured transactions we'll talk about them generally, and they involve attachment, perfection, priorities, and default. We've got general, attachment, perfection, priorities, and default. All right, general. It involves security interest, agreement, parties, collateral, and eligible transaction. Security interest. Interest in personal property or fixtures that secures obligations, payment, or performance. Agreement. Consensual agreement that provides for security interests. Substance of transaction controls, not the form of transaction. Court looks at what agreement does. Court cares little about what agreement is called. Parties. We have secured party, obligor, and debtor. Secured party. Person in whose favor security interest is created under security agreement. Obligor. Person who must pay or otherwise perform with respect to obligations secured by security interest. Debtor. A person with interest in collateral, such as collateral's sole owner. Debtor is usually also obligor. Collateral. Property subject to security interest. Tangible collateral. We have goods. These are anything movable at the time security interest attaches. The debtor's principal use at the time security interest attaches determines goods classification. There are several types: consumer goods, farm products, inventory, and equipment. Consumer goods. Goods acquired primarily for personal, family, or household purposes. Farm products. Crops or livestock goods, including supplies used or produced in farming. Inventory. Goods other than farm products held for sale or lease. Goods furnished under service contract, or goods that consist of raw materials, works in progress, or materials used or consumed in business. Usually refers to goods consumed in business, like fuel. Equipment. It's a catch-all class. Consists of goods that are not consumer goods, farm products, or inventory. Software. Software embedded in goods is treated as part of goods in which it is embedded. Software not embedded in goods is treated as general intangible. Collateral break. Other collateral. Classification is determined without reference to debtor's use. This is unlike tangible collateral. Chattel paper. One or more records that evidence both a monetary obligation and a security interest in or lease of specific goods. Doc, title doc, which confers on holder ownership rights in goods held by bailee. Instruments, both negotiable, like a cash bank note, and non-negotiable, like a money order. Investment property, includes both certificated and uncertificated securities, as well as securities accounts. Accounts. Right to payment for property sold, leased, or licensed, or services rendered. Commercial tort claims. Excludes individuals' personal injury or death tort claims. Deposit accounts. Letter of credit right. A letter of credit is a letter from the bank guaranteeing the buyer's payment to seller will be received on time and for the correct amount. In the event a buyer is unable to make a payment on the purchase, the bank will be required to cover the full and remaining purchase amount. General intangibles. It's a residual category. For example, copyrights. So you can use just about any tangible or intangible thing of value to secure a loan for personal property. Collateral break. Oh no, the road is closed. We have to take a detour. Into classification issues. We have multiple uses by a single debtor. When a debtor uses property for multiple purposes, principal use to which debtor put property determines goods class. Debtor's principal use at the time security interest attaches determines goods classification. Various uses by two or more debtors. Same property may fall into different classes, personal versus business, with respect to different debtors. Time for testing use. Generally, goods get classified when security interest attaches. And we're back on the road. All right, eligible transaction. The general rule is Article 9 governs transaction that creates security interest in personal property or fixtures. Leases. Covered under Article 9 when the transaction, though in a lease form, is in substance a secured transaction. Consignments. If Article 9 subject, consignor's security interest in consigned goods is treated as a PMSI in inventory. Liens. They're not generally Article 9 subject. Agricultural liens, unlike other liens, generally are Article 9 subject. Purchases. Generally, personal property sale is not Article 9 subject. Real property transactions. They're not generally Article 9 subject, but they can apply to a security interest in a secured obligation like a promissory note, though the obligation is itself secured by a transaction or interest to which Article 9 does not apply, like a real property mortgage. Oh, break for next section. You can pause the video here and come back when you like. All right, we're back. Let's talk attachment. Attachment involves, in general, value given by secured party, debtor's rights and collateral, the security agreement, after acquired collateral, proceeds, secured party's rights and duties, the debtor's rights, PMSI, accessions, and commingled goods. In general, a security interest enforceable against debtor with respect to collateral is attached to collateral. Requirements. 1. Secured party gives value. 2. Debtor has rights and collateral. 3. Debtor authenticates security agreement that describes collateral, or secured party has possession or control of collateral. Value given by secured party. Value given can be consideration sufficient to form a contract, extending credit, accepting delivery under pre-existing contract, or in satisfaction of a pre-existing claim. Future advances may also be secured by collateral. New value. When new value is required to perfect a security interest or have priority, new value can consist of money, money's worth in property, services, or new credit, or transferee's interest release of interest in property previously transferred to transferee. Debtor's rights and collateral. Generally, security interest attaches only to debtor's rights and collateral. Consignments. If consignor retains title to consigned goods, then consignee does not have rights in consigned goods. Security agreement. Secured party must satisfy Article 9 Statute of Frauds. Authenticated record. Security agreement must 1. Be in record. 2. Contain collateral's description And 3. Be authenticated by debtor. Description can list specific items or can identify Article 9 collateral type, all debtors' equipment, unless collateral is consumer goods or commercial tort claim. Supergeneric description, like all debtors' assets, is not sufficient. Original authenticated security agreement can serve as new debtors' authenticated security agreement by operation of law or by contract. A new debtor need not execute another agreement. Possession of collateral can satisfy statute of frauds. Secured parties' possession must be pursuant to a security agreement. Control of collateral can satisfy statute of frauds. Secured parties' control must be pursuant to a security agreement. After acquired collateral. The general rule is security agreement may cover collateral owned when security is granted, and also collateral debtor acquires after security interest is given. Exceptions. After acquired clause is not effective for consumer goods unless debtor acquires consumer goods within 10 days after secured party gives value or a commercial tort claim. Proceeds. Security interest attaches automatically to identifiable proceeds, whatever is acquired on collateral's disposition. Secured parties' rights and duties. Duties arising from secured parties' possession or control of collateral. The secured party has a duty to care to keep collateral identifiable and relinquish collateral's possession or control. Rights and risks arising from secured parties' possession or control of collateral. Right to charge for reasonable expenses. The loss or damage risk is on the debtor. Right to use or operate collateral. Right to hold proceeds. Account rights assignment. If debtor assigns his right to receive payment from account debtor to secured party, then secured party may notify account debtor to pay the secured party, aka himself. On notification's receipt, the account debtor may discharge his obligation only by paying the assignee, which in our case is the secured party. Debtor's rights. Accounting and other info from secured party. Secured party's notification of account debtors. When account debtors are no longer required to make payments to secured party, you have to let them know. PMSI. PMSI is a purchase money security interest, PMSI in goods. PMSI exists when secured party gave debtor value and debtor used the value to incur an obligation that enabled debtor to acquire goods. Or secured party sold goods to debtor and debtor incurred obligation to pay secured party all or part of purchase price. PMSI and software. PMSI and software exist only when the debtor acquired his software interest in integrated transaction where debtor also acquired interest in goods, a computer, and debtor acquired that interest in software for principal purpose of using software in goods. Accessions. Goods physically united with other goods, but original goods ID is not lost. Security interest created in collateral that becomes accession. Not lost due to collateral becoming accession. Also, security interest can be created in collateral that is an accession. Commingled goods. Goods physically united with other goods such that their ID is lost in product or mass. no security interest in specific goods that have been commingled. No security interest in specific goods that have been commingled, but security interest may attach to product or mass that results when goods are commingled. Existing security interest in collateral that subsequently becomes commingled goods. The security interest is transferred to the resulting product or mass. Break for next section. You can pause the video here and come back when you like. All right, we're back. Perfection. Security interest perfection. Security interest perfected on interest attachment and compliance with one of the perfection methods. Perfection creates superior rights and collateral to secured party over third party's collateral right. So you have priority. All right, perfection. Security interest perfection involves perfection methods, financial statement filing, possession, control, automatic perfection, non-Article 9 rules, and timing of perfection. Perfection methods. We have 1, we have filing, 2, possession, 3, control, and 4, automatic perfection. Financial statement filing gives interested parties notice of security interest existence. Filing is perfection method for any security interest except deposit account, money, or letter of credit rights. Financing statement must contain debtor's name, secured party's name, and collateral's description. Financing statement is notice filing. Alternatives, security agreement, or a mortgage. Debtor's name. The name on debtor's current driver's license or state-issued ID card for most states. Debtor's trade name. Insufficient by itself, not needed if debtor's name is correctly provided. Registered organization. Name shown on public organic records, incorporation articles. Debtor's name change. Secured party has 4 months to amend financing statement. If not done, collateral acquired by debtor after 4-month period is not covered by financing statement. Error in debtor's name. Financing statement is not effective unless standard search under debtor's correct name would disclose the statement. Error in secured party's name. Error in secured party's name generally does not affect security interest perfection, but it could subject the secured party to estoppel in another claimant's favor. Collateral's description. Unlike security agreement, financing statement may include collateral's supergeneric description, like all debtor's assets, if description sufficiently indicates collateral. After acquired property and future advances. Financing statement may be effective to cover after acquired property if such property falls within collateral described, whether mentioned or even contemplated by the parties at time the financing statement was authorized. Proceeds. Security interest in proceeds is perfected even if not mentioned in financing statement. Description's error. Secured party must prepare termination statement with respect to erroneous collateral. All right, we're moving on to debtor's authorization. Required, but debtor need not sign the financing statement. Ipso facto authorization. Debtor's security agreement authentication serves as authorization to file financing statement. Debtor's consent to filing is presumed when secured party seeks to perfect security interest in any identifiable proceeds of collateral by filing. Person entitled to file financing statement. Any person may do so. Filer's signature is not required. Filing location. Collateral related to real property. We have the office for recording the mortgage on related real property. So this would be local filing. All other collateral, we have the Secretary of State of debtor's location. This is central filing. Individual debtor, state in which debtor maintains his principal residence. Non-registered organization, for instance, a partnership. Non-registered organization debtor, state where it maintains its business place, and if it has more than one business place, at its chief executive office. Registered organization, corporation, state in which organization is organized. All right, moving on to filing's effective date. On delivery to filing office and filing fees tender. Filing office's refusal to accept. Justified refusal, failure to pay fee. Financing statement is treated as having not been filed. Unjustified refusal, financing statement treated as having been filed. Statement is effective except as to purchaser of collateral who gives value in reasonable reliance on absence of records from files. That was a lot to say. Let's try that again. Unjustified refusal. The financing statement is treated as having been filed. The statement is effective except as to the purchaser of collateral who gives value in reasonable reliance on the absence of record from files. Filing office's incorrect indexing of statement does not affect filed statement's effectiveness. Risk of filing office error rests on those who search files, not those who file statements. Perfection's length. Financing statement is generally effective for 5 years. Effective during this period, though there is no obligation secured by collateral and no commitment to make advance unless termination statement was filed. Continuation statement. Effective to extend perfection for 5 more years. No need for debtor signature. If not filed, security interest is treated as having never been perfected as against purchaser of collateral for value. Financing statement amendment. File to add or delete statement. File to add or delete statement covered collateral. Effective from filing date. Does not extend financing statement's effectiveness period. Termination statement. This terminates financing statement's effectiveness. All right. Now we're moving on to possession. Security interest in goods, instruments, negotiable docs, money, tangible collateral paper, tangible chattel paper, and certificated security may be perfected by possession. Perfection exists only during possession period. Control. Perfection exists only while secured party retains control. Collateral perfected by control. Only security interest in investment property, deposit accounts, letter of credit rights, electronic chattel paper, or electronic docs. Letter of credit rights. Generally, control is only perfection method unless such rights are supporting obligation for other collateral. Deposit account. Control is only perfection method. Automatic perfection. Indefinite perfection period. PMSI and consumer goods are automatically perfected on attachment. Secured party does not need to file a financing statement. Temporary perfection for new value. If new value is given under authenticated security agreement, security interest in certificated securities, negotiable docs, or instruments is automatically perfected for 20 days from attachment. Delivery of collateral to debtor. If collateral is delivered to debtor for purpose of selling or exchanging it, security interest in collateral remains temporarily perfected for 20 days. Collateral or debtor's interstate movement. Debtor's movement to another state. 4-month grace period for perfected security agreement. For security interest. Collateral's movement to debtor in another state. 1-year grace period for perfected security interest. Perfected possessory security interest. No effect on perfection when security interest is perfected under new state's law. Perfection lapse effect. Security interest generally ceases to be perfected on expiration of temporary perfection period. All right, let's talk about proceeds, temporary perfection. If security interest in original collateral is perfected, then security interest in proceeds is perfected for 20 days from attachment. Indefinite automatic perfection. Pursuant to financial statement. If original financing statement is broad enough to cover proceeds, or secured party amends financing statement to cover proceeds within 20 days, then security interest in proceeds continues to be perfected. Cash proceeds. If security interest in original collateral is perfected, then security interest in identifiable cash proceeds is perfected indefinitely. Same office. If filed financing statement covers original collateral and proceeds are collateral in which security interest may be perfected by filing an office in which financing statement has been filed already, then perfected security interest in the proceeds may continue indefinitely. Does not apply to proceeds acquired with cash proceeds. Limitation. If original filing ceases to be effective after 20-day period, then security interest in proceeds also ceases to be automatically perfected. Non-Article 9 rules. Notation for vehicles. Non-Article 9 statute controls perfection's manner. Filing is not sufficient if statute requires security interest notation on the title certificate. Timing of perfection. On security interest attachment and compliance with a perfection method. If there is perfection method change without lapse, then perfection dates from date on which security interest is first perfected. Break for a new section. You can pause the video here and come back when you like. All right, welcome back. Now we're going to talk about priorities. Article 9 prioritizes claims and pays them in order. Priority holder can agree to subordinate his interest to another's interest. We'll have 4 types of people, or 3 types of people. We have claimants, creditors, and transferees. Then we have priorities among secured parties. Claimants, they can be creditors, transferees, or buyers, and then other secured parties. All right, creditors. We have the general creditor, unsecured, judicial lien creditor, and statutory or common law lien creditor. General creditor, unsecured, has claim including judgment, but no lien on or security interest in collateral. The result, security interest always prevails over general creditors' rights in debtor's collateral. Judicial lien creditor acquires lien on collateral by a judicial process. The first result is perfected security interest has priority over the judicial lien. So in this case, this perfected security interest wins. Result 2, judicial lien has priority over unperfected security interest unless only reason security interest was unperfected was secured party had not yet given value. So in this case, the judicial lien wins. PMSI exception to result. If PMSI is perfected before or within 20 days after debtor receives collateral's possession, then PMSI has priority over creditor's rights that arose between security interest attachment time and filing time. Advances exception to result. Security interest securing advance is subordinate to judicial lien creditor's right when advance made more than 45 days after person becomes lien creditor, unless advance or commitment made without lien's knowledge. Statutory or common law lien creditor has possessory lien on collateral by statute or common law rules, a non-consensual lien. The result is the possessory lien has priority over any security interest if the possessory lien secures payment for goods or services furnished in the ordinary business course, like a mechanic's lien, unless statute provides different priority rule. All right, transferees. They obtain collateral's full title as a result of debtor's transfer. General rules. General transferee versus secured party with security interest. Security interest generally continues in collateral unless secured party authorizes transfer free of security interest. Buyer's rights versus unperfected security interest. Buyer takes collateral free from security interest if buyer gives value and receives delivery without security interest knowledge. Buyer's rights versus perfected security interest. Buyer generally takes collateral subject to the perfected security interest. BIOC, buyer in the ordinary course. 1. Buys goods, not farm products, by giving new value, cash, etc., not existing debt satisfaction. In ordinary course, from seller in business of selling goods of that kind, in good faith, and without actual knowledge, sale violates another's rights in the goods. The result, the BIOC takes free of any security interest in goods given by buyer-seller. Consumer buyer buys consumer goods for value for his own personal, family, or household use from a consumer seller and without knowledge of the security interest. Result, consumer buyer takes free of any consumer goods security interest unless secured party has filed financing statement covering the goods. This is the garage sale rule. Chattel paper buyer. 1. Gives new value and has collateral's possession or control. 2. Purchase made in good faith in an ordinary business course. And 3. Chattel paper does not indicate assignment to identified assignee, or purchase made without knowledge purchase violates secured party's rights. Chattel paper buyer. Chattel paper buyer has priority over security interest in chattel paper. Negotiable instrument or doc buyer. Buyer takes free of any security interest. of non-BIOC for future advances. Generally takes free of any security interest that secures advance made after the earlier of the time secured party acquires knowledge of the purchase or 45 days after the purchase. Takes subject to security interest if advance is made pursuant to commitment entered into without knowledge of buyer's purchases and before 45-day period's expiration. Money or funds transferee. Generally takes free of security interest in money or funds. Debtor is not treated as transferee. Article 2 Security Interest. Article 2 Security Interest, a buyer or seller with goods possession has priority over Article 9 Security Interest. Clean Title Certificate. Buyer without knowledge of prior security interest not noted on title takes goods free of that security interest. Priorities among secured parties. This involves general rules, PMSI priority rules, fixtures, proceeds, future advances, accessions, and finally investment property / deposit accounts. General rules. Perfected versus perfected. First to file or perfect has priority. Lapse in filing or perfection restarts the clock. Perfected versus unperfected. Perfected security interest has priority over unperfected security interest. Unperfected versus unperfected. First to attach has priority. First in time, first in right rule. PMSI priority rules. PMSI exists when a secured party gave debtor value and debtor used value to incur obligation that enabled debtor to acquire goods, or secured party sold goods to debtor and debtor incurred obligation to pay secured party all or part of purchase price. PMSI versus non-PMSI. Generally, PMSI has priority over prior non-PMSI security interest. PMSI in goods other than inventory or livestock versus any security interest. PMSI has priority if perfected before or within 20 days after debtor receives collateral's possession. PMSI in inventory or livestock versus any security interest. PMSI has priority if perfected by time debtor receives collateral's possession and purchase money secured party sends authenticated notice of PMSI to holder of any conflicting security interest before the debtor receives collateral's possession. Notification is required only when security interest was perfected by filing. Perfected PMSI versus perfected PMSI. First to file or perfect has priority. The exception, seller with PMSI has priority over a lender with PMSI. Proceeds from PMSI in goods. Priority of PMSI in goods generally extends to proceeds of original collateral if security interest is perfected when debtor receives collateral's possession or within 20 days thereafter. Fixtures. All right, security interest in fixtures versus real property interest. Security interest in fixtures has priority over interest in real property with which fixtures are associated if security interest in fixtures is perfected by fixture filing before real property interest is recorded. Perfected security interest in fixtures versus subsequent judicial lien. Perfected security interest in fixtures has the priority. PMSI in fixtures versus real property versus prior real property interest. PMSI in fixtures has priority if It is perfected by fixture filing before goods become fixtures, or within 20 days thereafter. Security interest in fixtures versus prior construction mortgage. Prior construction mortgage has priority if recorded before goods become fixtures. Proceeds. First to file or perfect rule applies. Original collateral's filing or perfection date is proceeds filing or perfection date. Original collateral's priority generally continues in proceeds if security interest in proceeds is perfected and proceeds are cash proceeds or proceeds of original collateral's same type. Future advances. First to file or perfect rule generally applies. Time advances made usually does not determine priority. Accessions. General priority rules govern. After default, secured party may have right to remove accession. Investment property / deposit accounts. Security interest held by secured party with control over collateral has priority over secured party without control over collateral. Break for a new section. You can pause the video here and come back when you like. Welcome back. Let's talk about default, our final topic. It is undefined by Article 9. It's left up to the parties. We have circumstances constituting default, default's consequences, and then we have collateral's possession, collateral's disposition, collateral's acceptance, which is strict foreclosure, and finally collateral's redemption. At the end, we'll talk about remedies for a secured party's failure to comply. So what happens when the secured party doesn't follow the rules? All right, circumstances constituting default. In general, security agreement is contract, and contract law determines any security agreement's terms' enforceability. Agreement not to assert defenses against assignee. This is permitted by Article 9. Default's consequences. Secured party may seek collateral's possession and sell it or retain it, or sue for obligation-based judgment. It involves cumulative remedies, simultaneous exercise, ignoring default, security interest in fixtures, security interest in accession, and secured party and account debtors. Cumulative remedies, simultaneous exercise. Cumulative remedies clause states parties' intention. Express rights and remedies in agreement are in addition to any other law or equity provided rights or remedies, not a substitution for them. Ignoring default may be treated as waiver of secured parties' rights. Security interest in fixtures. Secured party may remove fixture from real property if secured party has priority. Secured party is liable for repair costs. Security interest in accession. Secured party may remove accession from other property if accession security interest has priority. Secured party and account debtors. On default, secured party may notify account debtor to pay secured party. Collateral's possession. Secured party not required to give notice of default or intent to take collateral's possession. Means of possession limit. You can't breach the peace. Rendering equipment unusable. This is definitely permitted. Right, collateral's disposition involves the disposition standard, price, disposition time, disposition type, disposition notice, application of proceeds from the disposition, transferee's rights, and warranties. Disposition standard. All of disposition's aspects must be commercially reasonable. Method, manner, time, place. Price. No specific price must be obtained. The mere fact a higher price could have been obtained does not establish unreasonableness. Disposition time. No specific time required. Immediate disposition is not always required. Disposition type. Disposition may be by either public or private sale, but secured party cannot purchase collateral at private sale. Disposition notice. Secured party generally required to send authenticated notice of disposition. 2. A debtor, any secondary obligor, any other secured party or lien holder who has perfected by filing, any person who has notified secured party of claim or interest in collateral. When? At least 10 days before disposition. Notification exceptions. If collateral is perishable or threatens to decline speedily in value. 2. Collateral is of type customarily sold on a recognized market. 3. Person waived his right in authenticated writing. Application of proceeds from disposition. Cash proceeds. First, to reasonable disposition expenses. Then to satisfy secured obligation. Then to satisfy subordinate security agreements. And any remainder goes to the debtor. Non-cash proceeds. Applied or paid for application only if failure to do so would be commercially unreasonable. Treatment of surplus or deficiency. Generally, the debtor is entitled to any surplus and is liable for any deficiency. This is not the case, though, for sale of accounts, chattel paper, payment intangibles, or promissory notes. Low price disposition to secured party. Deficiency may be adjusted to reflect higher price that would have been realized from another person. Notice in consumer goods transaction. Secured party must send written notice as to any deficiency or surplus to debtor on demand. Transferee's rights. Collateral sale gives buyer at sale all of debtor's rights in collateral. Collateral remains subject to any senior security interest. Warranties. Collateral's disposition includes warranties of title, possession, and quiet enjoyment. Warranties may be disclaimed or modified. Collateral's acceptance, strict foreclosure. Obligation's full satisfaction. Debtor consents after default to acceptance in authenticated record, or debtor does not object to secured party's proposal to accept collateral within 20 days after proposal is sent. Obligation's partial satisfaction. Debtor consents after default to acceptance in authenticated record. Notification of parties other than the debtor. Secured party must notify any other secured party or lien holder of record, or person who timely notifies secured party of collateral interest claim. Special rule for consumer debtors. Partial satisfaction. Collateral's acceptance in obligation's partial satisfaction is not permitted in consumer transaction. Secured party can only accept collateral in obligation's full satisfaction. Strict foreclosure. If consumer goods are in secured party's possession, no strict foreclosure is permitted if the debtor has paid at least 60% of cash price in a PMSI case or 60% of obligation in a non-PMSI case. Goods must be sold, not kept in satisfaction. Waiver is permitted, but only after default and in authenticated agreement. Collateral's redemption. Redemption's method, redemption's time limit, and redemption rights waiver. Redemption's method. Redeemer must fulfill all collateral secured obligations and reasonable expenses secured party incurred in retaking collateral or preparing for its disposition. Acceleration clause can require redeemer to tender entire secured obligation balance. Redemption's time limit. Redemption is not permitted after disposition or foreclosure. Redemption rights waiver. Only permitted after default and by authenticated agreement. Remedies for secured parties' failure to comply. So now it's the secured party that's acting crazy. We have basic remedies, conversion action, and then finally non-liability of secured party to an unknown debtor or obligor. Basic remedies, injunctive relief, sought by debtor from court to compel or restrain secured party. Actual damages, any debtor suffer losses due to secured party's failure to comply with Article 9. Consumer goods, minimum statutory damages. Debtor or secondary obligor may recover amount not less than credit service charge plus 10% of obligation's principal amount, or time price differential plus 10% of cash price. Limit on deficiency for failure to comply with Article 9. Commercial transactions. Rebuttable presumption. Secured party is not entitled to collect deficiency exist. This is rebutted by showing deficiency would have nonetheless existed. No damages if deficiency is only reduced or eliminated as consequence of secured party's failure to comply with Article 9. Consumer transactions. Many courts apply same rule as for commercial transactions, but some courts bar deficiency. Conversion action. By debtor against secured party for improper collateral possession. Non-liability of secured party to unknown debtor or obligor. Secured party's non-liability to unknown debtor or obligor. And we're done. Thanks for going through this program on secured transactions.